What's up, guys? I hope you guys are all having an amazing day. Today we are going to gather to talk about risk management framework, obviously for the year 2025. This is something that I've recently put together, and especially as a lot of you guys continue to scale in your trading, this is going to be an important concept that you're really going to want to nurture and understand when you are trading. And the only way that this framework is going to work is if you continue to build new confidence in your setups and you're putting in the time to reflect on your setup using the student trading journal, journaling your setups. That is the only way you're actually going to get better. So I'm going to move the mic closer here. The only way you're going to get better is by building confidence in these setups, and this is really only going to work. You're going to have some time in the markets, a few months building for this to really make sense to you. If you're not at that point yet, that's okay. You can still continue to gather this information and understand it and absorb it because it will start to make sense as you see progress in your trading and your journey. So let's talk about it and what I mean, really going to break this down in depth. So this is how we are going to be more efficient with our prop firm accounts so we can maximize our profits, obviously, and then, down the line, get these into our own personal accounts. But this is how we're going to look to be managing our accounts. In this video, you're going to see me go into dynamic sizing, which is what this video is really going to be built around. Understanding, predetermining your risk and putting yourself in a better mindset when you're approaching the markets, and then also giving you guys a little chart just to give you guys a general sense of how you guys should be risking and just some of the math behind micros and everything to show you guys, if you cut out the little bullshit setups, excuse my language, the little BS setups that are in between your wins and your losses, how much of a difference it can make, because a lot of you guys will catch one really good setup for $300 and then want more, and then you take really two crappy setups for minus 75, and now you're only up 150. And this is a huge issue that I see a lot of people run into, and it really does hurt them because they always want to go back for more. Is going back for more necessarily a bad thing? No, not at all. Depending on your sizing, depending on how much your goal for the day, it's not necessarily a bad thing, but it's about the way that you guys are going about actually going into taking more gains from the market. These are really important concepts you guys have to understand. So a key note here is definitely going to be that risk management is not about minimizing profits. It's about staying alive in the game. If you guys can continue to spend less and less money on prop firm challenges and really make these accounts sustainable, then that is where you're going to see success. Because I've had this conversation with multiple people. I'll see people even all over the internet saying they're paying out 8 to 10K to 12, 15K, 20K a month with prop firms. But if you're spending even half of that, is a lot to be spending on firms. And when you do the math about what you're putting aside for taxes and everything, say I'm paying out 10K a month, but I'm spending 5K a month on accounts, profiting 5K on the month, which that's already, if you're making 10, to be profiting 5 is not really great margins. In the beginning, like, you're going to be able to, have to buy a few more accounts as you get the sustainability and everything down. But if we're paying out 8 to 10K a month, we really don't want to be spending absolute maximum. I would think 2-3K on accounts at the absolute maximum while we're trying to build capital. So yeah, very important concept. And listen, anybody can go into the markets, flip a coin and make money. It's about actually keeping that money and building a sustainable system to continue to make this money and actually make something out of it. So yeah, let's dive right into it. You really do have to stop treating yourself as someone who isn't profitable. And this is where dynamic risk sizing is going to come in. Before I get into that, I just want to give you guys this example. Eval accounts, right? Setting your risk on evals as you scale them definitely makes sense. And for a lot of you that are brand new, you definitely need to continue to do this. Set that because you can use dynamic sizing as you guys are getting comfortable on evals, obviously, because you haven't really been to the funded stage yet or too much. When you're on that eval account, especially like for someone like me, a little more experience down the line, setting risk definitely makes sense because I'm really just trying to risk a certain amount per trade to get as close to passing as I can. And then obviously the XFA is where, that's game time for me. The bigger accounts, especially a live account down the line, that's game time. And that's where we really want to focus on listening to what the market has to say and sizing differently. But on the evals, that's kind of your guys' XFA for now, especially my newer traders that are still building. So you do want to be very, focused on the sizing that you're putting on. And you can use this dynamic sizing concept on your evaluation accounts. And the numbers you guys are going to see on here is from 4 to 10 micros is the math that I laid out. A lot of you sit 2 and 3. Do not change your sizing based off this video, but just simply understand the concepts of being able to, kind of draw out what the multiplication and what the calculations look like for your sizing. So let's dive into dynamic sizing. What is dynamic sizing? In the easiest definition possible, I'm going to give to you guys, It is knowing what to size, when to size in the markets. So you could write that down. Dynamic sizing is knowing when to size and what size to actually size within the financial markets, within our prop firm accounts, our trading accounts, etc. And the main two things that are going to make up and really get us to understand how we should be sizing is going to be conviction and conditions. Now, obviously, the conviction and the conditions, you guys are going to learn, this concept and be able to actually understand this concept as you build confidence and as you build your strategy and your system. So there's a lot of stuff that needs to be done on the back end, like I said, but as you get more comfortable, and really understanding and knowing what you know, because there's, a lot of you are still at the psychological point where you're still learning, where you don't really know what you don't know. You learn, kind of what I guide you to learn, which is perfect, but you don't know what you don't know. Like, there's more out there, but you don't really know what it is. Then a lot of you see the education, but you don't, you haven't gotten through all of it yet. So you understand what there is to be learned, you just haven't done it yet. And then this is actually where you get to the point where you understand what's going on, and now you're just trying to refine and perfect and continue the growth. And that's exactly what you're going to do with understanding your conviction and conditions when coming into the market. This is how you're going to come into the market and be able to use dynamic sizing and know when to put size on and when to put, take some size off and put less size on. We're going to start off with conviction here. That's reacting to your environment and your understanding of price action. How convicted am I in this setup, right? And these really do go hand in hand. But the conviction you have in this setup, how many confluences are on the table based on my strategy, based on my reflection and my journaling? Does this look like a higher probability setup, or do you think I should wait for more confluences? And the confluences that you guys have in your strategy, right? Say you're trading mine. A lot of you guys are using the EMAs, you're using VWAP, you're using, ICT concepts, fair value gaps, etc. You're using the macro times and 10 a.m. reversal to look for your moves to play out. And of course, you're using, the distributions to key overnight levels, such as Asia high, Asia low, London high, London low. So those are your confluences, right? For most of you that are just getting started, obviously you guys see me, I use order flow, I use all different types of things. I continue to refine my strategy. And yeah, so that's what it means by conviction. How many boxes can you check basically on your entry criteria, and what's your understanding of price action? We're near all-time highs, right? A lot of you are just getting into the markets. Obviously, this is your first time ever seeing price action near all-time highs, especially if you're just starting these last few weeks. Obviously, we set new highs, 2 or 3 times this year, but you know what I'm saying. So as far as the conviction, right, you guys have not really traded around all-time highs, so you guys generally should always have, kind of a lower conviction, unless, at least you want to be at least 300-400 points away, even 250 comfortably, so you're not too close to those all-time highs, and that's where you might have a little more conviction. And obviously 1,000 points away, you have a pretty good conviction on NQ and stuff like that, of where we are. But yeah, that's understanding how convicted you are in that setup. And then the other, pillar that's going to hold this concept up and build dynamic sizing is the conditions. Understanding the bigger time frame conditions, your higher probability days, your lower probability days. For example, if it's a day that we have no red folder, that is a lower probability day, but imagine now it's a lower red folder day, just like we had this week. We had a lower red folder day with an hourly fair value gap above us, about 100 points in between, and another hourly fair value gap below us. So we have price now wedged in between 2 hourly fair value gaps, and we have only a little space in between. That's going to call for 150, 100, 200 point ranges of chop. And that's where, chop, you guys can get caught in indecision, fake outs, price not distributing cleanly, extremely unclean deliveries, especially just in red folder days in general, but of course in that scenario, those are lower conditions, and that is where most traders, especially you guys as you're learning, should be in that 1, 2, 3, 4 micro sizing in those lower conditions. And then, obviously if you have better conditions, right, we had 830 data, we have a nice range to work with, we might have a clear daily fair value gap above us that we already tapped into, and it looks like we want to make a nice distribution lower and hoping for a clean delivery into our macro times and our key points and using our confluences to see when this wants to deliver, and you can check all your boxes. This is when you guys that usually, on those lower probability days might trade 2 to 3 micros, can see yourself sizing up to 4, 5, 6 micros max. I would say my beginners, I would not see you guys higher than 6 micros. And even the intermediate traders, you really don't want to go higher than 5, 6 micros if you were just looking to gain consistency in your trading. And this is a very, very important concept. And that's kind of how you guys would go about understanding your conviction and your conditions. If you guys always have any questions on that, always feel free to reach out. And let's talk about this concept of mental trash. I've heard mental trash, just predetermined risk. There's plenty of ways to identify this term, right? But basically, this is just predetermining your risk, confronting and understanding the risk you plan on putting on the table. Before you take any trade, you actually want to mentally lose that money in that account and see the money subtracted from that balance before you take the trade. Now, someone say, like, Nick, isn't this like negative manifestation? Like, isn't this like really, really negative to put in my head that I'm already losing this money? No, because you have to really be able to picture your account with that loss and be okay with it. If you guys, so say you're on Top Step, right? You had a 2K balance, you take a 1K payout. As you guys know, when you take a payout on Top Step X, obviously, or just Top Step in general, it moves you down to $0. So say I'm at 2K balance, I take a 1K payout. So now I have a 1K balance, and my max drawdown is 0. So now you only have 1K in drawdown compared to like the usual 2K or more you would have in drawdown. So now I only have 1K in drawdown because I took that payout, right? And let's say my next trade, I want to size 5 micros, but I want to risk $400. Say I have a huge stop for some reason or a fair value gap. I want to give it room, right? And now you find yourself in a situation where before you take this trade, a lot of you are going to be like, oh my gosh, I have $1,000 in drawdown. I'm going to risk $400 on one trade. I'm not feeling good about this. This isn't feeling good. You need to listen to those emotions. And this is the concept of mental trash. If you can't be at $1,000 balance and picture yourself losing 400 of that and being at a $600 balance to continue, and get more drawdown built, then you shouldn't be putting yourself in a situation where you are risking $400. If you have $1,000 in drawdown, a lot of you really should not be putting yourself in a situation where you're risking absolute maximum $200 per trade, $150 per trade. If we're really talking about being sustainable with these accounts. And it can be easier said than done, but these are concepts you guys have to get better at putting into your trading and putting in motion to actually see yourself improve. So that's that concept of losing it in your brain first and seeing if you're actually mentally okay with losing that money and you're okay with putting yourself closer to your drawdown. And that's a very, very important concept to understand. Just a little note on here about, getting those BS setups out of the way. I'm not saying don't take trades, but I'm saying look for the higher quality setups to pay, depending on what that looks like for your setup. Would you rather take 10 trades a month or make 10K or 200 trades a month and make 3K? The point of trading is not to always be attached to your screen. You're supposed to be enjoying the freedom of trading. This is just a very general example of understanding that, instead of trying to force lower probability, lower quality setups all the time, look for those higher probability setups, even if it means you're actually executing less trades and it's going to get, more boring that way. But if it's going to be more successful that way, and it is for 90% of the traders, 95% of the traders that I see that really see success, taking less setups than the average person, that's where success will happen. And that's something you will do, right, if that's attracting success. How to tackle your emotions more, just a little note here. Plenty of education on this already. But just understanding, using your daily profit targets, using your daily, your lockout features, your max loss limits, on Top Step, right? Those daily settings, Top Step X or Project X, so for my top 1 traders that use Project X, right? You see how that works. Top Step X, it's the same platform. They give you access to all these amazing things, trade limits. You can now, just a new feature, you can limit how many contracts you're putting on in one position, right? So use these to your advantage, especially as you're trying to build your discipline, and really understand, when you should be locking out. I trade NY session. It's what works for me. Every once in a while I'll find myself trying to do something with Asia price action, and it's just so unnecessary. Sticking to one session is really how you guys are going to get this stuff down correctly. I highly recommend it. That's exactly what I'm doing. That's what I'm teaching you guys to do. And I think this is a great video for all, no matter what honestly market you're trading. These psychological concepts are very transferable to everywhere. And even if you're an options trader, right, you should be relatively be able to calculate your risk and stuff and understand your drawdown and your account balance and everything. So this is kind of a chart that I highly recommend screenshotting. You guys can store this. You guys can print it out. You can put it on your own Notion. My student trading journals, anybody that's, my students, my inner circle students, obviously you have access to this. The student training journal that I gave you as well as this. So yeah. Make sure you're using these concepts, right? And look at the gain compared to the loss. Just doing some basic calculations of some setups that I commonly take. Just kind of back tested that and understanding, if the market, and actually this past week, the market gave me a situation, right, where I could size 10 micros. I could size a mini, which is obviously $20 a point, and I could target, this is just an example, but I actually targeted closer to 30 points with only 7 or 8 points of risk. If the market's putting me in a scenario where I don't need to risk a lot and I see clear continuation like I did in that one setup, and we had a fair value gap, the liquidity was already taken, I got a really, really good entry, and I saw, a lot of bullish order flow coming in, and this is a scenario where I feel like I don't need to put much actual point risk on the table. This is a scenario with a better RR. It was like a 3.5 RR, only risking, whatever I said, 8.5 points, where I was not risking much. I was risking maybe, $140, whatever that calculation is, maybe closer to 180, and catching whatever I made on that setup, 30 times 20, yeah, about 550, wherever I got out, 550, 540 bucks off that setup, which is an amazing RR. So these are the scenarios you guys want to find yourselves in, and that's when the market actually tells you to size up. But again, if it's a low probability day, I don't like where we are, we're 50 points away from an all-time high, I shouldn't catch myself in that situation. I should be sitting around that 4, 5, 6 area, especially if there's no red folder, probably even lower than this, probably 2, 3 micros if I'm copy trading 2, 3, 4 accounts. This is a really important concept. I really hope this was helpful for a lot of you. And this is really just a great way to manage your risk as you continue to grow with prop firms. This will be up on YouTube as well as in the inner circle. If you guys enjoyed this on YouTube, drop a like, comment, subscribe, and definitely look into working closer with me. If you have interests, shoot me a DM on Instagram, TikTok, etc. Just reach out. I love taking on new students. I do like to keep it, a generally good size because, of course, I want to make sure I'm getting, fair attention to every student. That's just how I have it structured. Just for more education like this, daily live trading, stuff like that, feel free to come tap in. Leave some thoughts in the comments what you think. WAP people, you guys get an extra 30 minutes to an hour of education every single week added to the WAP. And you guys know how valuable this education is. I love that you guys are continuing to absorb this education. See a lot of you guys, the watch times and your percentages of finishing these videos really, really going up. So continue to do your thing. Let's keep eating. I wish the best for all of you. And yeah, that's all I got. Peace.